is you contact your bank and you say, please put 500 yuan a month into a gold accumulation plan for me. The value, the annual, this year, or I think last year's household savings were calculated to be the equivalent of about $2.5 trillion. Well, okay, two questions. I'll deal with the second one first. People who make that comment basically do not understand the difference between money and credit.
Agreed.
That's the fundamental point. The central banks that are buying it have been predominantly Asian. And I think really those very much in the, if you like, the information network of the Shanghai Cooperation Organization and also BRICS. And that obviously is led by Russia and China. Now, Russia, you could argue, has the interest to try and destroy the dollar. They haven't actually taken any steps in that direction, I think basically because the Chinese have encouraged them to stay their hand. China's approach to international affairs is to let others make mistakes. They don't want to get blamed for anything. They have to continue to trade with us. So what they do basically is they do what they do, but they're not going to go and make life difficult for anyone else. Until, of course, there gets a point, and I think this is where we are. There comes a point where the Chinese authorities realize they have to protect their own currency from a collapse in the dollar. To that extent, I think Trump has brought forward a lot of the problems that were already in the dollar. And what the Chinese are now doing is they're looking at the impact on their own currency and saying, well, do we want to hold dollars in our reserves? The answer is no. So they sell the dollars. Then sort of saying to themselves, the way the dollar is going, it's in a debt trap. I mean, they're making the analysis that I'm making. I mean, these guys are not stupid. They really do understand what they're doing. In fact, they're a lot cleverer than me, I would say. So what they're doing is they're looking at the consequences for their own currency. So rather than, let us say, going out to make the dollar's life more difficult, what they're doing is they're now seeking to protect themselves. It's as simple as that. The way they see this is they know, and they've known this going all the way back, certainly to 1983, when they appointed the People's Bank of China with the sole responsibility for managing the nation's gold and silver acquisition programs. They acquired an awful lot of gold without telling anybody. I mean, it didn't go onto the central bank's reserve balance sheet, as it were. It went into wealth funds, safe. It also went round to the People's Liberation Army, the Communist Youth Party, and so on. All these various accounts were used to hide large quantities of bullion. Now, so they have got the bullion to protect themselves because they know that with a capitalist system, and this is what they've been taught in Marxist schools, capitalist system eventually destroys itself. And part of that destruction is the end of its currency. So they have known ever since the 1970s, ever since Mao Zedong passed away, they have known they needed to protect themselves from events external to China over which they had no control. And knowing that fiat currencies, which started in 1971, basically, they know that they were going to collapse. So what do? They have to acquire the gold to protect their own currency. So that's the background to their policy. They have done that. They have the gold. Now, they're now in a position where they have overtly been selling dollars, getting rid of them. So what do? I mean, do you go and buy euros? No, because, or yen? No, you don't do that for the very simple reason that if the dollar is going to be wiped out or suffer a huge, great devaluation, it's going to undermine the purchasing power of every other currency. So, no, you don't do that. You have to go into real legal money. So what you have seen is a reserve shift in the People's Bank of China away from dollars, away from other currencies, into gold, into real money. They understand the difference between legal money and credit. Credit is always someone else's liability. And when that liability gets too much, for that credit to be credible, get the hell out of it. That's what they're doing. And so if you look at the central banking community as a whole, it's all the central banks who, regularly meet as members of the Shanghai Cooperation Organization or dialogue partners of the Shanghai Cooperation Organization, and so on and so forth, and also the BRICS members. These guys, they meet and they talk. And not only that, but of course, people who are not, or central banks that are not quite in that area, they also meet and talk. And they have connections. And they begin to understand this. Like Poland, for example. Poland has been very aggressively accumulating gold. So much so that really there's very, very little available. We now have another problem, and that is that China's savers have got nowhere else to go other than bank deposits and gold. Now, the Chinese are cutting interest rates basically to try and stimulate production, whatever. We don't actually know why they're doing it. We can make assumptions. But the point is they're cutting interest rates. So from the point of view of the depositor, the household, as it were, the household savings, they're finding that the return that they're getting on their savings is going down. So where do they go? They see the gold price in yuan breaking into new high ground. This is the new game in town as far as they're concerned. We're not actually thinking too hard about why it might be going up. We may have an idea. We might have our own ideas. But basically, it's the psychology of a bull market. And are you going to miss out on it? The answer is no. So what you do is you tell your bank, and this is something they have in China, the banks offer in China, they offer gold accumulation plans. So what you do is you contact your bank and you say, please put 500 yuan a month into a gold accumulation plan for me. The value, the annual, this year, or I think last year's household savings were calculated to be the equivalent of about $2.5 trillion. So you can see household savings overhanging the bullion market suddenly making the average person on the street first stop and think, and then secondly, wonder whether he should buy some, and then thirdly, actually going out and buying some. This is in China, big time. So everything is actually beginning to fall apart for the dollar. And this is, this is why, the gold price seems to have soared, but it's actually the dollar going down. The other interesting thing, and these are developments literally in the last few days, is that the Chinese authorities, led by the People's Bank of China and the Shanghai Gold Exchange, which it controls, have said that they're going to open gold vaults in foreign countries, which will facilitate the buying and selling of yuan instruments, selected yuan instruments, they're finding what they can do, outside China. Now, this is a big innovation, because up until now, China has never permitted any gold to leave China. Literally, it's like Hotel California for gold. It never gets out. What we've seen is that they have announced that they're going to be opening a vault in Hong Kong. Now, that makes sense, because Hong Kong, if you like, is the financial outlet, the international financial outlet for China. So, yeah, that makes sense. This morning or overnight, we hear that the Saudis have agreed to a vault being opened in Saudi Arabia. This is going to lead to yuan being exchanged for gold being exchanged for yuan. It's going to lead to oil being priced more in yuan than in dollars. This is the Saudis recognizing exactly the argument we're talking about, that actually the dollar is dead. The dollar is in its last throes. So they've got to protect themselves. They can no longer take revenue exclusively in dollars. They have got to get out of that. They have got to have a plan B. They're doing exactly the same thing as the Chinese. So what we're getting, I mean, at the moment, it'll be a floating rate, if you like, between the yuan and gold. But at some stage, that's going to get fixed. And that will be fixed, if you like. I don't know, I could imagine the dollar losing maybe another 90% of its purchasing power, something like that.